Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show that's for you and about you. Those who work so hard for your money and want your money to start working harder for you now. You want that freedom and cash flow and prosperity today, not 30 or 40 years from now, but right now to live that life that you love with those that you love. But most importantly, guys, it's not just about getting rich, it's about living a rich life because as you're blessed financially, you have the means and the ability to bless more lives and create greater impact in this world. And that is exactly what it means to be a Rippler. Thank you for allowing me to create a ripple effect through you. I appreciate you guys binging and sharing and tuning in and all of the great things that you guys do. Hey, as a reminder, if you haven't done so already, go to our YouTube channel, subscribe on the Money Ripples with Chris Miles page. Subscribe there. We got lots of little bonus shorts and other little bonus videos that we throw on in addition to these podcasts. So if you haven't been there yet, go and subscribe and check that out now.
Chris Miles was able to retire twice by the time he was 39 years old, but he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
All right, guys. So I brought on a special guest today. This guest here is David Royster. Now, David is actually not only is he a client of mine here at Money Ripples, but also a guy that's local here in Utah, which I don't often get that kind of benefit, right? Now, David has this vast array of experiences, which is what we really want to talk about today, because he's done everything from active real estate investing. He's done some passive deals. He's done syndications. He's done rentals. He's now got a laundromat. He's done franchises. Like when we talk about the different types of investment opportunities and things you could do, David's done it. He's kind of been there and done that. And so that's why I want to bring him on today, share his experience and the wisdom he's gained over the years doing this. So David, welcome to our show.
Well, thank you.
So yeah, I mean, working with you and Patty, it's been awesome, and you guys have just been, fantastic. And again, like it's not often we work with active investors, right? Like usually we just get people say, I just want passive stuff, give me passive. And you guys definitely come with like this nice background here. So give us a little bit more about your guys' background, like just about you and your family, just about who you guys are.
So I'm actually going to start back with a bad experience we had in the stock market.
Uh-huh.
So we years ago, I was in a company and I got $500,000 worth of a stock option I exercised. So I had $500,000. So I thought, let me hire a financial planner because with this much money, I really want to make sure I know what to do with that money. And we had other things too. So we had other money as well on top of that. So he had us go into a number of different things. But on that 500,000, we told him we want to be aggressive. Mm-hmm. And I was new. I did not know what aggressive meant from the standpoint of he decided to put all of our money on margin.
Oh.
And so all of our stock on margin.
Well, let's stop there. For those of you that don't know what margin means, it means that he actually traded it with debt, right? So if you have $1 in the stock market, you can borrow another $1 and invest it in stocks. So you have $2, but the stock goes down, you lose a lot more money. So if it goes up, you make more money too. So yeah, go ahead.
And this happened during the time frame where we had that major crash because of the housing market. And so I started getting these things in the mail saying a call. Mm-hmm. Or what do you call it again?
A margin call, where they say, hey, we don't want you to lose more because if you lose too much, then they lose their part of the money that they lent to you as well. So they want to sell out.
They sell your shares at the price there. And I kept seeing that drop. And so I talked to our financial advisor and I said, well, what should we do? And his response was, the market always recovers. you cannot recover from margin calls. And so it got to where we were, I think like 30, 40,000 is all we had left of this 500,000.
Oh, 30 or 40? Is that what you said?
30 or 40,000, yeah. On top of that, he decided that he was going to use a charitable remainder trust on a house we had that got us in a really bad position. And we did oil trade and just a bunch of other stuff that was just stupid. So we lost a lot of money with a financial planner. And the biggest thing we gained from that is that you got to manage your own. You got to be, I mean, you get someone to help you, but you need to take ownership and responsibility for what you do.
Definitely.
And so then we moved from California to Utah because my sister, Patty's brother, is in real estate. So we start flipping homes. I got laid off, which I've said is one of the happiest days of my life because it cut the tie. I didn't have to work for an employer anymore. And then we started in that market where we've been pretty much active or pretty much knowledgeable on everything we do since then. So we'll buy a turnkey rental, but we know enough about the real estate market and we've vetted it well enough to where we know it'll do okay. And so it's passive, but it's we know what's going on doing that. And same thing with the first couple syndication deals we did for multifamily. We weren't experts at it, but we knew enough at that time where we went off and did it, and then started learning more. And then we did our own syndication deal. And I'm not sure if I told you this, Chris, but we bought that one for $3.15 million a little over 2 years ago, and now it's appraised at 6.4.
Oof.
And we just refinanced it, and we're going to pay off all our investors. And so we'll be in the deal after that without anyone else's. Well, we're going to get some cheaper money now that we've done that. So just so that we can have more in our pocket, but we don't need to do that.
Yeah.
So it's a great position to be at.
You can switch to more long-term financing and better terms and save a lot of money, make more.
Yeah. And then I guess I didn't talk enough about my wife, but Patty is a rock star. I mean, we really are partners in everything we do. I go to networking meetings and they say, "Oh, you're Patty's husband." So they know her better than they know me quite often. And we have 4 children. And so we're trying to instill those principles on them too. And just another side note is I hiked to the base camp of Mount Everest too. So that's a unique story. Yeah.
That's
but
great.
I can't run near as fast as you can, Chris. Not a chance. So
yeah, I mean, base camp to Everest, that's a whole nother aspect of athleticism that's required for that. That's impressive.
It's just trudging along and you get there.
That's right.
So, yeah.
Well, I love this story. I mean, like you said, I mean, going on margin. I mean, if you had $500,000 and they traded on margin, that means they were trading $1 million, investing $1 million. That must have meant that the stock or whatever they were trading in probably lost 45%. Because when you lose that 450,000, then they just say, well, instead of losing that leverage, right? That 450,000 has to come out of your 500,000, leave with you about 50. So that's crazy to go through that experience and then have to rebuild do it on your own. I love the fact you took control, which is a big thing that we try to teach is, I had somebody recently say like, well, I want somebody just to do it for me. I'm like, well, no, you don't want that. That's irresponsible, right? I mean, it's nice to have help and have a team, but you definitely don't want to have somebody who's doing all the work for you. You're just totally brain off. You have no clue what's going on with your money other than maybe some random statements you get. And that's just not good.
Right. And then we had started podcasting and we had Chris Miles on our podcast. And then we said, you know what? Chris knows a lot more than we do. So then we end up having Chris become a client of Chris. And it's really helpful to talk to someone that speaks your language. Because I think in a lot of cases, maybe with us, it wasn't so much, oh, wow, I have this whole new vision of what to do with my money, because we were kind of somewhat on the same page as maybe a lot of other clients you have.
Yeah.
But for us, it's like, it just felt so comfortable to say, we're doing these things and you give us ideas on who to reach out to. And it just worked. It was just like a wonderful thing. Yeah. And I'll tell you, if I had a full-time job, I'd be talking to Chris every day of the week. Because if you don't have the bandwidth or time to be able to do it yourself, just to have that expertise to show you deals that you can get into that are passive enough to where you can continue to do your job and get returns that are so much more reliable. I mean, there's a whole difference between growing your net worth and growing your cash flow.
Yeah.
And I think people don't really understand that. They look at this, okay, when I retire, I'm going to have all this money, I'll do a 4% draw.
Mhm.
It's like, well, why don't you know beforehand? Why don't you start getting passive income now, and then you know that you can make it work without having to go to work. That's
Yeah,
the only way to do it, right?
that's true. I appreciate the shout out. At first, when you said, if somebody has a full-time job, they should be talking to us. And I thought you meant talking to us would be a full-time job. It's like,
Oh.
talking to Chris Miles is a full-time job. I got to tell you. No. No, that's great. I appreciate the shout out there. And definitely, I agree with the wisdom you're saying there too, is that, it's a big difference between cash flow and net worth. And you want both, right? But
Mhm.
cash flow definitely makes a big difference. And like you're just finding out with your own multifamily deal there. I mean, that alone is a huge major way to grow your money, but also it's giving you that opportunity to create a lot of cash flow and profit for you too.
And I think most of the things that you offer for your clients are ones that appreciate in value, as well as the cash flow increases over time too. They're hard assets. Maybe not all of them, but I think most are hard assets where they get both an increase in net worth as well as an increase in monthly cash flow.
That's a good point. And especially if it's in the real estate game, right? We know that a lot of times you can raise rents. I mean, rents are naturally raising every year anyways. And to have, when everybody's worried about inflation and what are they going to do, and their income, their fixed income is not going to be worth nearly as much the next year. That's definitely a good point, is that, and that's what point I forget about a lot with real estate, because I always look at the entry level, but when you start to look at the long-term benefits too, there's definitely almost that raise and pay over time.
Yeah.
Well, give us some perspective too. I mean, you've done a lot of active, you've done some of the passive. Now you've got a franchise. You actually heard Kim Daly on our show and went and worked with her to find this franchise that you started. Where do you guys see with your investing? Like, where do you like that balance? Because it sounds like you love active investing, but you also want some passive. How do you figure that balance for yourselves?
I guess really it's come down to the fact that we want to get to a certain cash flow.
Mm-hmm.
That my wife loves to take vacations.
Mm-hmm.
And so this last year when we had I guess the pandemic's happened forever now. But as we were going through the pandemic, we stopped buying properties to flip. So we became passive. But we had that rental income. And we learned at that point we can live on that rental income, and that'd be enough.
Yeah.
So we are financially independent right now, so to speak.
Yeah, you're out of the rat
race. As my wife used to say, and she'll, maybe not the same term, but she says, yeah, we're financially independent on a Walmart budget. And so she wants to have a higher buffer on that.
Yeah.
And she probably needs one too, because I'm like, you can spend a little bit more on your credit card than you normally do. What's going on here, right? So she doesn't want to be hounded anymore on things like that either. So that's
big difference between financial independence and financial freedom, right? Where you don't have to check, how much you spent versus, where you're like, okay, yep, we're technically financially independent, but we still got to make sure we're, a wise steward of our money at the same time.
Exactly. Yeah. So that's why we decided, and we were also kind of bored. So that's why we decided to look at franchises, because when you just sit in your office, just doing something for, most of a year, hoping to be able to find something else, it gets pretty boring. So we were listening to your podcast, and Kim Daly was a great resource. And we made it clear with Kim that we don't want a job long term.
Yeah.
We don't want mine just working our heinies off for a period of time so that we got it well established, so that we can then have it run on autopilot almost. But we don't want, so we're very careful on, because there's a lot of different franchise ideas that somewhere you're just buying yourself a job. We don't want to buy ourselves a job. We want to buy ourselves something where we could spend just a few hours a week, maybe even remotely, to make sure that things are running smoothly on that. And so that's why we got into the laundry business on that. And so, yeah. And so like we were started off working every hour. I mean, we worked the full time initially without any employees because we wanted to make sure we stayed cash flow positive for that business side of itself. And as we made more money, then we says, okay, now we can afford to have employees.
Yeah.
Because we wanted the business to hold itself. And so we're still working because we have a milestone where we have to pay another $9,000 a month, and that's in May. So we still got to increase our revenue, but we're seeing it's going up.
That's great.
So it's been really exciting.
What have you learned from that? Because I think some people get the misconception of, oh, it's a franchise. I'm going to buy a Chick-fil-A or a McDonald's. You know, they always think restaurant franchises, right? And a lot of times people also think, oh, I can totally be hands off. But you guys were really to help kind of increase those profits early on. You guys were very hands on with this business to get it to the point eventually where it can be, you know, much more residual passive for you guys. What were some big lessons you learned in the process?
Well, you know what? People do that the other way too. People that do have full-time jobs have got into the laundry business and made it work. They just have to dump a lot more money into it. Yeah. But what we really learned is, well, one thing is that we have a lot of 5-star Google reviews. And that's because we were so involved up front to greet the customers, because no one's going to be more customer oriented than the owners, because we really want to get their business, right? So we got so many positive glowing reviews, not just that they were 5 stars, but the comments they made on that. And so we would get a lot of customers coming in later on because of those 5-star reviews. So that was part of it. And so we really got to know the business too, really well, and understand it. And then now that we're doing a lot more wash, dry, fold, we've had to do some ourselves. We had our first client that we had, and we gave them a really discounted rate. And they have these big old long towels, the sheets to fold, and they're very particular on that. And we realized that that wasn't profitable. That was not a good profitable one. And we also understood how long it took. So if our employees working it, it's like, okay, we're more realistic on what they could get accomplished during their time, both ways. So we also understand it takes time, but if nothing gets done, we know that they could have got that done too. So we have a really good gauge of what we expect our employees to be able to accomplish in that time.
Awesome. No, that's great. Man, you're getting experience. You're getting the experience that most people never get in a lifetime. You know, you guys have been getting it really over the last decade or so. It's really neat.
True. Yeah.
I mean, you guys are really coming kind of all around investors. You know, that's really what's kind of happening here. And I love that.
I keep telling Patty that the problem is we have ADHD. We just can't, oh, look at that, a little squirrel there, a little squirrel over there.
That looks fun.
Yeah. So she says, no, we're smart because we're creating multiple streams of income. So
for sure.
That's a better way of seeing it, but I still think we're a little bit of a squirrel effect where we won't do anything because we get bored. Too easy.
Exactly. Well, I know we gotta jump off here, but any last pieces of wisdom or advice you give the listeners here listening to the podcast right now?
Just that you need to manage your own money. I mean, you can have help, and you need to have help because you don't know what you don't know. But you really need to take ownership of your investments to succeed. And one of the best assets you can have is your network too. Yeah. So building a network is also really important. But if you have a full-time job and you really don't have a lot of bandwidth, I'll tell you, I would not invest my money in the stock market, or not very much of it. I would do it in hard assets, and I would tie off with Chris Miles on that.
Oh, couldn't have said it better myself. Well, David, appreciate your time today. And again, lots of great wisdom. And I completely agree. Like, people need to become their own money boss, right? Really to take that ownership and stewardship of their own money and then, let that network, that team, help you and connect you with some of the right stuff, the right deals or the right opportunities. So couldn't have said it better myself, man. So again, thank you for your time. Thank Patty for me as well. always love seeing her too. And everybody else, this is the thing is that, we listen to this podcast, but the great thing you learn from David here is that not only is he like going and applying this stuff, but he even took a podcast, reached out to some of the people and applied it. Right. And we're not saying you go and invest in whomever you hear on this podcast, but I think the key thing is that the main difference between those that are eternal listeners and those that actually become financially independent are those that actually go and take action on it. So guys, go and find ways to take action on the things that you're learning from the show. Make it a wonderful and prosperous week. And we'll see you later.
Visit us online at moneyripples.com for more resources to help you fix money leaks and get your money working harder for you now.